Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap. We had a pretty mixed session overnight. Wall Street had a rough start to the week on concern that a cheap artificial intelligence model from Chinese startup DeepSeek could make valuations of the tech space a bit, I suppose, questioned. And that has so far, of course, powered the bull market in the past year or so. And investors are starting to question whether those valuations are justified. So looking at the NASDAQ Composite, that was down 3.1%. The S&P 500 lost 1.5% to 6,012. On the flip side, the Dow Jones Industrial Average added 289 points or 0.7% to close at 44,714. Gains in Apple, Johnson & Johnson, and Travelers helped the 30-stock index. For more insights, we are joined by Joseph Sroka. He's the Chief Investment Officer and co-founder at NovaPoint Capital. Joseph, good morning, and how are you doing today?
Good morning, Ryan. I am doing great. How are you?
I'm doing great as well, and also a happy new year to you, Joseph. Hope all has been great so far this year, but it looks like markets are not having a terrific day. Walk us through what you're taking away from the DeepSeek-driven sell-off. How justified is it, and how much is this an overreaction?
Well, I think it's justified in the fact that we shouldn't be blind to the fact that there are going to be global competitors in artificial intelligence. And DeepSeek coming out expressing that they can cheaply and quickly put an AI model together. If you really think about tech entrepreneurship, that's what it's all about. Faster, cheaper, and better. So from that standpoint, no issues. What I do think is, we've certainly now got some degree of skepticism on valuation of some of the AI-related stocks, but that's healthy. Investors should not be valuation blind to every growth story that comes along. And then, zooming out a little bit for the whole market, things certainly could have been worse today. As you mentioned, the Dow Jones closed higher, and NVIDIA is in the Dow Jones, and that was one of the companies directly in DeepSeek's crosshairs in the AI market. NVIDIA was down over 16% today, yet the Dow managed to put up a positive number. And if we think about it in broad terms, this wasn't a terrorism event or a credit crunch or even a carry trade unwind like we saw last August that would take the whole market down. It was very narrowly focused, hey, there's a new competitor, and, maybe that makes your company more susceptible to competition, and therefore a little bit of a valuation discount to your previous valuation is warranted. Again, I think very healthy in the big picture.
Yeah, I suppose when you consider what's been going on in the past year or so, last week you had the Stargate project, $500 billion worth of investments. And then, of course, in the past year or so, all about ChatGPT. And here comes along a cheaper, potentially faster version, costing just some $6 billion put together. So people are asking, hey, do we need to reconsider, or $6 million put together? So people are asking, hey, is this something we need to review when it comes to valuations? There's also the other point about how this could start a arms race among the AI, I suppose, nations between the U.S. and China. How's it going to play out when it comes to how Donald Trump might want to approach this? Because he's been trying to clamp down on exports of AI technology to China.
Yeah, I mean, certainly we've seen both in the Biden administration and the Trump administration, a crackdown on exporting U.S. high technology to China and other countries for national security reasons, and that's quite understandable. And, there's been really what we've seen in valuations is there's been an arms race within the U.S. hyperscalers, whether it's Meta or Microsoft or Amazon or OpenAI, to get ahead in the AI race. You look at a DeepSeek and you say, okay, there's an AI model there and it's efficient. It's a whole other story to scale that to enterprise levels. And especially, with the national security concerns we have between the U.S. and China, it's not like the U.S. Department of Defense or the U.S. government or any large U.S. multinational companies are going to say, you know what, we were thinking about bringing ChatGPT or OpenAI into our business or Meta's Llama into our business to help us figure out how to use AI to our best potential, they're not exactly going to dump them overboard for a Chinese startup. So as AI continues to scale in the U.S., there's still going to be need for data centers. There's still going to be need for energy. There's still going to be need for chips. So I wouldn't fear that whole market is going to go away.
All right, talking about how Donald Trump is going to approach China. He has been talking up tariffs for quite some time. Are you surprised we haven't really seen anything aggressive as what markets were bracing for?
Yeah, I think with, President Trump, the whole idea is there's what he says and then there's what he does. And it's not that it's a contradiction, but he will often say things first to gauge the reaction out in the marketplace, and then he'll follow up with action as it's warranted. I think he wants to have a positive relationship with President Xi in China. I think he wants the U.S. to be competitive with China, but he certainly, as a businessman, doesn't want to ruin the economies of both nations. I think he'd like to see both nations prosper. He would just like to see the U.S. prosper a little more. Where we really saw tariffs come into play was for more geopolitical gains. Colombia was the one in the crosshairs over the weekend because they did not want to originally accept deportees as part of President Trump's, agenda for border security and the deportation of criminal illegal aliens. And he threatened to put tariffs on Colombia of 25% immediately, ramping up to 50% within a week. And Colombia backed down and accepted the flights of criminal illegal aliens to the U.S. back to Colombia. So I think the president wants to use the tariffs as an economic tool, but more as a geopolitical tool to reestablish the U.S. as a strong player in the international stage. And that was similar to what he did when he addressed the World Economic Forum as well.
Yeah, talking about areas that could prosper, he's got his eye on the oil sector, trying to get oil majors to drill more and bring down the price of oil. So with that in focus, is that the place to look at when it comes to parking your money right now and away from the green space?
Yeah, I mean, we're fans of the energy industry. We've been overweight energy, for as long as I can remember in our strategies. And that's part of, the agenda with President Trump. When he went to the World Economic Forum, he said, America's open for business. He wants companies to come here and invest, and he wants companies to come here and manufacture because he wants to create jobs in the U.S. and he wants to create a vibrant economy in the U.S. Part of that is the fact that if we, drill more for oil and gas and mine more coal in the U.S. and use it for onshoring to power domestic industry, even though that domestic industry may be foreign companies investing to manufacture in the U.S., that helps with a competitive advantage. It shortens supply chains, which we learned during COVID. Shorter supply chains might be better in order to get goods to market. So I really think, the idea of, increasing energy supply in the U.S., both for the, domestic economy, as well as for export, I think that's a strong message to send to the rest of the world.
All right, talking about messages, he has been trying to send some messages to the U.S. Federal Reserve, calling for lower rates. We're going to get an FOMC meeting in the coming days. So what are you expecting in terms of the path forward? When are we going to get the next rate cut?
Yeah, certainly, a week ago, even after we had seen, some strong job numbers and then, the inflation numbers were sort of okay. I think the Fed's really taken a wait-and-see approach. The concept of a lot of tariffs, which to your point we haven't seen yet, could be inflationary. And, the Fed as an independent entity that sets monetary policy away from any economic or fiscal policy that the presidential administration may bring up, they just want to make sure that there's not a reemergence of inflation or a reacceleration of inflation. The president's been in office for a week now. While we've seen a lot of initiatives, we haven't really seen any data. The Fed's very data-driven. It's probably going to be a couple months of jobs reports and inflation reports before the Fed's going to get off the sidelines and to make a decision. So right now, it looks like they're going to be on pause for the next two meetings, which would be the January meeting and the March meeting. And if you look at the CME Fed funds futures, it looks like there may be a 25 basis point cut in the Fed funds rate at the May meeting.
All right, staying put for now until more clarity is forthcoming. We've been in conversation with Joseph Sroka. He's the Chief Investment Officer and co-founder at NovaPoint Capital. Joseph, thanks for your time and insights. It's been great chatting with you as always.
Thank you. Have a great day, Ryan.
Have a great one as well, Joseph. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.